So we're starting out the day 60,900, a little bit better, I guess, than last night, right? Overall, it's been, I know, a little bit disappointing because Bitcoin has been sliding down, but the stock market has been going up. And I know that that's been a little disappointing, but what is the market doing today? Well, it's red today because we got a big inflation reading today. Okay. But I do have a feeling we could turn around, and here's why. So the inflation reading, the CPI reading came out. Inflation is now at 2.4% for last month, and jobless claims went up, okay, a little bit higher, and this is reading that it's pretty bad. This reads like, oh my God, inflation has gone up and it looks really, really bad. But, like if you look at it, this is the chart from August, we were still at 2.5. So we actually overall CPI still went down from 2.5 to 2.4%. So I don't know why the headline is making it sound like it's like a bad reading. It's actually not. I think why it's a bad reading is because Dow Jones expected it to be even less at 2.3%, and it came and fell under because it didn't hit 2.3. It went to 2.4. But ultimately, inflation, at least according to CPI, is still going down in the right direction, which is good, which is what we want to see. What's not good is this labor market that is going down, right? Whenever you see the labor market doing worse, meaning people out of jobs and unemployment going higher, well, that's no good. 258,000 for the last week. That is the highest since August 5th of 2023, well above the forecast. So that's no good. But when it comes to rate cuts, that's actually good. So there are two conditions for massive rate cuts, right? Inflation going down and overall economic activity going down, which includes the labor force. Well, labor force going, yeah. So overall, this isn't that bad. It's actually good for what we want, which is pilot to cut more rates. But it's more or less in line with expectations, right? But we'll see. Wall Street may take it a bad way, but I have a feeling that Wall Street will actually probably they're overreacting right now. So right now, even though we're opening in red, I actually think there's a really good chance this we're going to flip into the green again and could have a good day. Now, here's the thing though. We've been having a lot of good days recently, including yesterday, and it has not been helping Bitcoin and crypto. And I actually think, to be honest, I think a lot of it is because a lot of people are now putting a lot of money into stocks. And I think that could actually be a temporary thing. And that is the reason why we haven't been seeing the explosive move. But again, I think that's just a distraction at this point. Now, in terms of the rate cuts, which we know are still coming, there are a few guesses, not just a few, a ton of guesses, a ton of guesses. In terms of the next cut, which is 25 basis point, which we already know. So overall, in 2024, how many are we going to get? 50 basis point, which is basically what everyone's guessing, except Citigroup is guessing 75, because we still do have one in December. And then in 2025, we could have anywhere from another 100 basis points to 125. That's what everyone else is guessing. So overall, we're looking at a lot of rate cuts, okay, going forward. And that is very, very nice. That's what we want to see overall, right? This is part of the liquidity injection from the US. And of course, we have a new president that will be coming in, depending on who it is. There could be more injections coming in to the markets. So that could be also very, very good, right? So overall, I think we're setting ourselves up to be in a really good position moving forward. So that's why there are some great things happening. Now, like I said, with the stock market, right? Right now, it does seem like we have deviated. You could see Bitcoin's trajectory and the market's trajectory, right? And there are times where we do decouple, right? Like look at earlier this year in February and March, even though the stock market went up, but look at how fast Bitcoin went up. There are times when we decouple. Right now, we have decoupled a little bit because stocks are still hot right now, right? But we will catch up and we'll probably decouple again when we have that explosiveness going upwards. So it tends to happen. Sometimes we couple, sometimes we decouple, right? So sometimes that's a good thing, sometimes that's a bad thing. You know, sometimes people complain, like when the stock market comes down, tech gets sold off. Oh, why does Bitcoin couple with, NASDAQ, right? There are times where it's good. Sometimes it's bad, right? But right now, I do think that decoupling, right now it looks bad, but hey, we have seen that decoupling before, like in March, and it was absolutely fantastic. And I do think we will see that again. Right now, we're only in the second week of October, and we know things can move very, very quickly, very, very quickly. And it's still so early, especially when, the big boys are still getting involved and still buying. 47% of hedge funds maintain crypto exposure, and that 47% will only increase from here. Eventually, it's going to be 100%. It's going to be silly for any hedge funds not to have any exposure in the future. Basically, it'll be like a hedge fund like not having any tech exposure. That would be silly, right? Like basically all of them will be involved with crypto at some point. And everyone will hold something. The Thai SEC is also allowing crypto products into funds now, right? So it's not just the US, everywhere around the world is looking to get involved with crypto. Nation states are now also getting involved as well. Now, here's the thing. This is why you guys need to get ready, right? And you don't want to miss this. Because right now it does seem like, that decoupling that I was talking about, it does seem like, and this volatility, it seems like we're in this bear trap. It really feels like all this shaking out, all this staleness really feels like this is where we are in this bear trap. Right before this huge parabolic run that we're about to head into. If you look at the prior cycles, October is when we usually start moving. 2016 is when we started. 2020 is when we started. And right prior to those start dates, we had choppiness, we had big falls, and then we just basically started moving and did not go. I mean, before the parabolic run, we just did not go, and we just seemed like there was something going on and it seemed like we were not going to go, and then we did. So it really seemed like this is where we are in the cycle where there is a bear trap. This is a point where the whales or whoever, the institutions, BlackRock, whoever you want to say, is trying the last ditch effort to try to get all the retail out before we start heading into the euphoria stage, right? This is the stage where I told you guys you like you feel dirty because of how much money you're going to make, right? I feel like that's where we are. That's why it's been so frustrating that every single time we get some kind of momentum, we get knocked down. Like it feels intentional, right? Like I know you guys could feel it. It's like we get some momentum, we get knocked down, or there's some other event that knocks us down. It's like intentional. It's making you frustrated. And I feel like that is exactly on purpose trying to drive us out because there is greatness right around the corner.